The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
TGIF, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Breakout Investing can be heard 5 days a week on TFNN from 3 to 4 Eastern. If you want to give me a call, always enjoy the calls from you folks, 877-927-6648. If you can't listen to the show live, no worries. You can always head over to iTunes and download the podcast. Feel free to leave a review there if you'd like as well. And don't forget, you can listen to all TFNN programming on your smartphone. That's very easy to do. Just plug those earbuds in, open your smartphone browser, type in tfnn.mobi. That's all you have to do. Type in tfnn.mobi, and you can listen to the stream that way. And, of course, don't forget about Tiger TV, which is also viewable on your handheld device. Tiger TV, not only can you listen to the audio of the show, but you can also look at charts live right along with me. And if you've been listening to me for any amount of time, you know I like to go over charts on the program. So Channel 1, the show is carried live on Tiger TV, and it is archived on Channel 13. Let's check in on the markets here. NASDAQ Composite right now down almost 14 points, 0.4% today to 3123 on the NASDAQ Composite. There was a time where volume on the NASDAQ was tracking quite a bit higher than what we saw Thursday. Right now it is tracking about 8% higher than Thursday's level. NASDAQ volume yesterday was pretty much average, 1.66 billion shares. Volume on the New York Stock Exchange tracking a little bit lighter than what we saw Thursday, which was about 629 million. So we could come in just a little bit below that on the NYSE. Let's check in on the S&P 500 here. We'll see what that index is up to. And the S&P 500 down about 6 points, 0.4% to 1441. Looked like it was going to be a day of heavy volume selling. Then we got a headline out of Spain that turns out the recapitalization needed by Spanish banks is going to total about 76 billion. It wasn't a real surprising number. That was mostly in line with what the market was looking for, but still it brought some buyers into the market. We almost turned green there for a little while, but another constructive day of trading. The losses are not severe today. Market leaders continue to hang in there pretty well. So economic data earlier today, we had personal income and spending data for August. Incomes up 0.1%. That was a little bit below expectations of 0.2% rise. Spending up 0.5% in August. That was in line with expectations. Unfortunately, another weak reading in manufacturing activity. The Chicago Purchasing Managers Index for September came in at 49.7. That was quite a bit lower than expected. The estimate was for a reading of 52.9. This is another one of these indices that where you get a reading over 50 that signifies expansion. Readings under 50 mean contraction. So, no matter where you look over the past several weeks, whether it's the Institute for Supply Management Manufacturing Index, and I believe that is coming out next week on Monday. So we're going to get another reading on manufacturing this Monday with the ISM Manufacturing Index, but you've got the Philly Fed, the Empire Manufacturing today, the Chicago Purchasing Managers Index. Man, these readings have been crummy in recent weeks. So economy is still on shaky ground here, but the bottom line is that this market continues to act pretty well. The naysayers are out there. Naysayers are, in the camp that this is not going to last. We are going to see some market softness. That could very well be the case between now and the end of the year. But, you really just have to pay attention to distribution. You need to pay attention to institutional selling, not only in the major averages, but in leading stocks as well. And headed into today, we'd still only seen 2 higher volume declines for the NASDAQ since August 21st, which translation there just hasn't been institutional selling in the market. And when you look at all the, the bullish charts out there and these large cap, mid cap, small cap tech names and leadership across a variety of industry groups, they're holding gains nicely. They're holding above support. We're going to go over more charts on the program today, some new names that look interesting. So, until you really start to see the leaders break down and you start to see pronounced signs of institutional selling in the major averages, there's no reason to get, too negative on this market yet. So, if the market were to end right now, we would have mild distribution on the NASDAQ. So if, volume ends higher than Thursday, the NASDAQ ends with a meaningful percentage decline, say a meaningful percentage decline of more than 0.3% or 0.4%. That would be its third distribution day or higher volume decline since August 21st. Still not, enough to cause real problems, but you always want to pay attention when higher volume declines start to increase in frequency. The other last bit of economic data we had today was the final reading for the month of September from the University of Michigan. The Consumer Sentiment Index came in at 78.3. Not a big surprise there, down from the first reading earlier this month of 79.2. Remember, earlier in the week, we got a very, very nice reading from the Conference Board's Consumer Confidence Index. So consumer confidence generally doing pretty good here. Let's check in on shares of Apple. Interesting comments from Apple CEO Tim Cook today. Saw a little blurb over at investors.com where CEO Tim Cook apologized Friday to Apple customers for the mapping software that was included in the new iPhone 5. Apparently, it is miserable, not functional. So apparently Apple is human here. Tim Cook even encouraged iPhone users to seek out alternatives from rivals like Microsoft and Google. So Apple is they'll fix the problem. You remember they had that antenna problem in previous iPhones, but hard to believe that the iPhone 5 could come out and have the map application so bad, but I'm sure they were rushing to get it out, and looks like they're paying the price for that. So Apple today under some selling pressure near its session low, down $10.81, 1.6% to $670.51. Apple used to be a holding in my Ultimate Growth Stocks model portfolio. I had a nice gain there, and I decided to take profits recently. If Apple, comes down, finds support at its 50-day moving average, this is a stock that I could easily see owning at some point in the future. But I wanted to take some profits, take some money off the table. My Ultimate Growth Stocks model portfolio still holds 10 or 11 stocks at this point. Many are outperforming the market nicely, starting to build some nice cushion, so I can be patient and let them work. If you want to see what stocks are in the model portfolio, you can get a 30-day free trial to Ultimate Growth Stocks. You can do that right on the homepage of TFNN.com. Just click on the newsletter link on the homepage, then click on Investment Newsletters. You'll see all the information right there. Checking in on crude oil today, up 0.4% to $92.19 a barrel. Gold for December delivery fell $6.60 or 0.4%. It settled at $1,773.90 an ounce. In the third quarter, gold gained about 11%. Let's check in on the GLD. This is supposed to trade at approximately 1/10 the price of an ounce of gold. The GLD right now down 64 cents to 171.70. The GLD has been on a tremendous price run since the middle of August. And what I want to do is we'll check out the weekly chart for the Spider Gold Trust. Here it is down here. And despite a huge move, I mean, this is still a decent technical setup here. So this chart tells me that gold probably wants to go higher from here. If gold wants to go higher from here, then one would expect the dollar to continue weak. I mean, it's not a sure thing, but this is a good solid technical setup for the GLD. It's got its high earlier in the year of 174 that it has not taken out yet. So it's building a good base here. And if this dollar, continues to weaken and we do see new money come in from the sidelines between now and the end of the year, maybe we get a little soft pullback here. But if another wave of money comes in and that dollar weakens again, could easily see a breakout in the GLD. Let's take a look at RGLD. This is Royal Gold, a very extended gold stock. Now, we're talking about the GLD has not staged a technical breakout yet. Well, Royal Gold has, and it's very extended. You don't want to chase the stock up here. Right now, the stock is up 1.4% to $100 even. $100 even for Royal Gold. Let's swing over, take a look at a weekly for Royal Gold as well, and you'll see a nice solid cup with handle breakout here. The stock is actually working on 7 straight weekly price gains. We talked about a name like Google that was up 10 weeks in a row in price, 11 weeks in a row. I mean, just tremendous gains for that stock. Royal Gold's rally has been impressive as well, again working on 7 straight weekly price gains. The breakout over the high point in the handle here of 80.97, that happened about 6 weeks ago, about a month and a half ago, and it has been on a tear. But again, very extended now after that recent breakout over 81. Be careful of chasing it up here. All right. Oh yeah, I didn't get a close for the U.S. dollar index, and I know I can get that pretty quickly here. Last check, the U.S. dollar was higher, and it is higher. It is 79.91 right now for the U.S. dollar index, up about 36 ticks. So market actually hanging in there pretty well, considering we do have strength in the dollar today. We'll take a look at that U.S. dollar index. And we see still some technical damage here. Yesterday, the dollar index closed at 79.55, so it is a little bit higher today, 79.91, but I still think that 80.72 level here could be significant resistance. Also, its 50-day moving average here at 81.49. So the U.S. dollar index is going to have some significant overhead supply to work through if it's going to gain any meaningful traction here. That's a big question mark if it's going to be able to do that or not. Take a look at financials today. The Financial Select Sector Spider Fund. See, still consolidating gains nicely here. It's been under pressure for a couple of weeks now, still holding nicely above its 50-day moving average here at 15.14. I expect that level will be good support if it gets down that far, but XLF not doing anything wrong here. It recently staged a technical breakout, just coming back here in light volume. Right now, today it's down 6 cents to 15.59. One of XLF's top holdings, Bank of America, today settled a class action lawsuit related to its 2009 buy of Merrill Lynch for $2.4 billion. Happy you're with me, folks, on this Friday. Give me a call, 877-927-6648. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. I was on Twitter today. My good friend, buddy, pal, Joe Fahmy reminded us from the Stock Traders Almanac that stocks have advanced in every fourth quarter since World War II, when an incumbent president wins the election. So right now the polls are looking pretty favorable for President Obama, but a lot could change between now and November. But if Obama wins, we could see a good fourth quarter for stocks. I'm still optimistic about the prospects of that happening. Whatever happened to September being a bad month for stocks? Here we are at the end of the month. Which index actually outperformed for the month of September? It was the Dow. Right now, with about 35 minutes left to go in Friday's session, Dow's up 2.7% for the month. S&P 500 close behind, up 2.5%. And the NASDAQ for the month of September right now up 1.9%. So a lot of people probably on the sidelines getting scared out of this market by the headlines saying you don't want to be in stocks in September. But I'm glad I've been invested in this market, and model portfolio, Ultimate Growth Stocks model portfolio continues to do pretty well. All right, let's take a look at some other headlines today. Little known company here, AZZ. That's the ticker symbol. It's also the name of the company, AZZ Incorporated. They make electrical equipment and components. Big gap up for the stock, hits an intraday high today of $40.66, trading at its session low now, so it's given back a lot of its early gains, but still it is up 9.8% on the day to $38.18. Very strong growth from the company. Earnings were up 63% from a year ago to 62 cents a share. That beat the consensus estimate by 10 cents. Sales growth also impressive, up 34% to just over $153 million. That beat the consensus estimate by about $7 million. Revenue at AZZ's electrical and industrial products business doubled to $66.5 million. So a big move for that stock today. Let's take a look at some other high-profile names on the move today. Kind of a reasonable performance for Nike. Late Thursday, the company reported earnings. This is a stock that, let's just say, it's technically challenged at this point. Hit a high today of 96.18, a low of 92.79. It is trading in the upper half of its range right now. Still down about 1% to 95.06. The bottom line and top line growth, well, the earnings declined from a year ago to $1.27 a share, but it was nicely above the consensus estimate of $1.12. Sales also came in above expectations at $6.67 billion, up 10% from a year ago. The consensus estimate was sales of $6.4. So overall sales growth pretty impressive, but investors spooked not so much by what's going on in North America, because North American business continues to do pretty well. Sales in the quarter in North America were up 23% to $2.7 billion. Even China, the revenues increased 8% to $572 million, but future orders in China, which is a closely watched metric for Nike, fell 6%. A year ago, future orders in China were up 27%. So clearly slowing growth in China is weighing on Nike, and that is frankly why the stock has been lagging the market for some time. I know the value guys are going to say it's a value down here, but the bottom line, there's been a lot more institutional selling in this stock than institutional buying by a long shot. And when a stock is under distribution, it's very difficult to make money. That is why I am not interested in Nike right now. What stores has a lot of Nike product in it? Well, that would be Finish Line, F-I-N-L. Finish Line also reported earnings. They have hundreds of stores that offer athletic apparel, shoes, and related accessories. Finish Line today only off 10 cents to $22.65. Trying to hold on to its 50-day moving average here. Not doing too badly. It's trading in the bottom half of its range today, but Finish Line earnings were up 26% to 49 cents a share, sales up 16% to $385 million. So they continue to do pretty good business. Finish Line also announced a deal to be the exclusive athletic footwear partner of Macy's. That's ticker M on the New York Stock Exchange. Finish Line will open specialty sports clothing shops in more than 450 Macy's department stores. All right, when we come back, folks, we'll take a look at RIM. I think a lot of the early enthusiasm about this company's earnings report Thursday has faded. We'll see how that stock is doing today, and then take a look at scads of still good setups in this market. We'll do that when we come back. Stick with me.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. So we talked about earnings from Nike. The earnings and sales growth, not too bad, but really concerned about China and slowing growth there. Research in Motion also reported earnings after the close on Thursday. It is working on 4 straight gains here, and listen, its technical picture has improved. It's still far off its highs. I think this is another stock that similar to the U.S. dollar is going to have a lot of overhead supply to work through, and RIM certainly isn't out of the woods yet in terms of is it going to be able to return to consistent earnings growth. But the stock right now up 7.4% to $7.67. It hit an intraday high of $8.20, and analysts were looking for a loss of 47 cents a share, but RIM, the loss was only 27 cents, so that was better than expected. Sales fell 31% from a year ago to $2.87 billion, but that was also nicely above the consensus estimate of $2.5 billion. RIM shipped 7.4 million BlackBerries in the quarter. That was better than expected, and the company also increased its cash position by $100 million. Total cash now stands at $2.1 billion. So still not a stock I'm interested in down here. Much better fish to fry in this market, although I know plenty of traders that like to play this stock, but not my cup of tea. Still, it's a newsworthy stock. Also, an impressive move for Accenture today. There was a point where Accenture was really growing the bottom line and top line nicely. That is not so much the case now, but you got to give the stock credit because it is under serious accumulation today. Actually, it looks like a little breakout from a cup with handle pattern today. Let's take a look and see where that swing point is. 66.75 would be the high point in the handle area right here. Big gap up for Accenture. Shares were recently trading around $70.04. Up 7.1% on the day. Kind of lackluster earnings and sales growth, but earnings came in at 87 cents a share, down 3% from a year ago. Sales were up 2% to $7.29 billion. And also WAG, of course, is Walgreens, the drugstore operator. It is looking like an outside day for the stock. Today it is down 31 cents, almost 0.9% to 36.29. WAG's chart was looking pretty good here, firming up at its 50-day moving average, but kind of a wild day of trading. Not sure how I feel about it now after a recent breakout try over 36. Looks like it's kind of stalling up here. Profit at Walgreens was 48 cents a share, down 16% from a year ago. Sales down 5% to just over $17 billion. Let's check in on shares of Questcor. This stock has been in the news lately, and this is has at one time was a big market leader. Can't get out of its own way now. A lot of headlines around this stock. It is couldn't hold on to early gains today. It's still up 3.7% today to $18.48. The company initiated a new quarterly dividend and also boosted its share repurchase program to kind of calm negative investor sentiment recently around the stock. It was Citron Research that first raised concerns about the company. Questcor recently acknowledged that health insurer Aetna limited reimbursement of its primary drug Acthar, which is some indications used to treat infantile spasms. But then Questcor came out and said that Aetna only handles about 5% of the total subscription for Acthar, so it's not a real big part of the business. And then just after that, the Aetna news came out. Questcor said that the government is investigating its promotional practices. So not that long ago, 2 weeks ago, in fact, this was a $52 stock. It is now $18.48, and news of a dividend and share repurchase program not doing much to help the stock today. Take a look at some other names here. Interesting to see the selling pressure persist in shares of Stratasys. Stratasys broke below its 50-day moving average last week. Still a lot of sellers in this stock. I'd be very careful here trying to catch it on sale. It's down another 4% today to $54.47. It had been a nice market leader at one point. This is a company that does three-dimensional prototyping systems for the manufacturing sector. But Stratasys under a lot of pressure today, and a lot of people wondering when DDD, 3D Systems, in a similar business, makes 3D printers. This one has also been under a lot of pressure as well. So it looks like the runs for YS and DDD are over for now. I'd be, when stocks are under distribution like this, trying to catch them on sale is very, very risky business. When you're in a market uptrend, it's much better targeting relative price strength as opposed to relative price weakness. Let's check in on shares of MasterCard here. MasterCard still hanging in there. Kind of wondering why, you really haven't had a bona fide technical breakout in this stock yet. I mean, September was a pretty good month. August was a pretty good month for the stock, but shares of MasterCard right now down $1.52 to $4.50.65. There's still a swing point of $4.61, $4.62 here. I'm not convinced that this one's ready to really break out in heavy volume from its current big cup with handle pattern. In fact, we could look at a weekly chart. I think I have a weekly in here of MasterCard. There it is. I'm not sure if yeah. Okay, so, well, this is not the weekly, but let me just pull up a weekly. This has got the 10-day and 20-day moving average. All right, let's pull up MasterCard here. There we go. Okay, so you can see this big cup with handle pattern that's been forming recently. It's a good base setup, but as I've been saying in recent shows, there are a lot of technical setups right there that still look compelling, but you have to ask the question, is this potentially a lagging stock at this point, since stocks have been running for several weeks now? So definitely one to keep an eye on. But I would not be a buyer until you see fresh new money coming into the stock. It is not happening yet. Interesting recovery for Equinix, EQIX. This is another name I recently took profits in for the Ultimate Growth Stocks model portfolio. Won't be afraid to visit it in the future, but it has made a tremendous price run. The stock had a wild day of trading. See on this day here, it hit an intraday high just over 210, and then it reversed hard on September 13th right here. But the stock has rallied back nicely. It's up another $1.36 today to 205.76. Equinix operates these big data centers where customers rent space from the company to house computer servers and things like that. Basically, companies that are processing massive amounts of data on a daily basis. So it's an interesting business. They're well positioned for growth, and they recently announced plans to convert to a real estate investment trust, which has tremendous tax benefits. They're going to be returning a lot of profits to shareholders. That was when the stock really surged on September 13th, and then the very next day it just fell in heavy volume. But it's recovered nicely here, so Equinix acting well in this tape that is acting pretty well as well. All right. Other bases forming here, Lululemon Athletica. I remember there was a time when people had given up on Lulu, really questioning whether or not the yoga company was going to be able to continue its red-hot growth. But technically, I still like the look of Lulu here. It is forming a bullish cup with handle pattern. Big move on September 7th right here when the company reported earnings, and now it's forming a little handle area. So we'll keep an eye on this one for a potential breakout over this $77.50, $78 price level here, but a nice handle area forming. We'll see if Lulu has more left. Definitely a good one for the watch list. And Yandex showing similar action as well. See, Yandex has got this little handle area forming. Volume has been getting lighter and lighter. Shares of Yandex outperforming nicely today, up 3.4% to 24.14. This is a Russia-based provider of internet search services. So you've got Google in the U.S., you've got Baidu in China, and you've got Yandex in Russia. Now, Yandex has a lot going for it. This is a company that's very strong fundamentally. They're expected to earn 82 cents a share this year. In 2012, that would be up 28% from 2011. Next year, they're supposed to earn $1.10 a share, which would be up 34%. So you could see some accelerating annual earnings growth for Yandex. This is another interesting technical setup in the market. Question is, will money come in that will be able to fuel this a breakout over 25. It still has more work to do. To its credit, it is a stock under accumulation. When the company reported earnings back in July or August, just the last quarterly report, sales were up 29% to about $210 million, and earnings were up 36%. So very consistent, very steady growth, and actually fairly robust growth in recent quarters at Yandex. And like I just mentioned, annual earnings this year and next supposed to be pretty good. So Yandex, another interesting name to watch here. Let's take a look at another model portfolio holding here that I've had for a little while. I like the technical setup here. When I own a stock and it goes higher and continues to act well, rather than take profits, I'm not averse to averaging up in the stock. So if I've got 200 shares of a stock, it breaks out successfully, starts moving sideways, I'm not going to add another 200 shares to the position. I'll always add a smaller amount to what I own. I may add 50 shares, no more than 100 shares. But Edwards Lifesciences is getting into position here, like its technical setup a lot. It's approaching a swing point of 109.88, which is going to be the high set earlier this month, the high point in the handle area. It's working on 2 straight gains, up another 1.7% today to 107.35. So if it takes out that 109.88 price level with conviction, this would be a stock I would not be afraid to add to at all. Edwards Life Sciences is a medical device maker. They make products that are used to treat cardiovascular disorders, heart valve, peripheral vascular disease, but kind of high-tech products, and stock that has been performing very well fundamentally and technically strong. Let's take a look at Siri. I haven't looked at Siri very much because it's a $2 stock, but its price strength just can't be ignored here. It's also been an impressive turnaround for a company that many left for dead, just carrying huge amounts of debt. I believe it was John Malone who came to the company's rescue within the past year or two, but Sirius XM Radio has actually returned to pretty good growth in recent quarters. Top line growth has been there. They've been increasing year-over-year sales for several quarters in a row, but there's a swing point here of $2.64. This is super speculative. There's no question about it. Valuation is palatable here, but at $2.50 stock, it's just on the speculative side. But credit to Sirius for a nice turnaround here, and its weekly chart actually looks pretty bullish here. Let's take a look at a weekly chart for Sirius XM Radio, and we'll see just really what could only be called as a beautiful technical setup here. Nice breakout recently, comes down to its 10-week moving average, finding support here, holding gains nicely under a fair amount of accumulation. There's not much I can say that is wrong with recent price and volume trends in the stock. So Sirius XM Radio looking pretty strong here. And then my friend Bob Lang, who I bring on the show every now and then, he mentioned Aruba Networks to me today, wanted me to take a look, and this is another tech name that's vying for a breakout here over 22.41. Shares were recently trading around 22.51, up 0.8% on the day, and another strong, fast grower here, Aruba Networks. It's already in its fiscal 2013 year right now, but earnings this year expected to be up 22% from fiscal 2012, and then fiscal 2014 up 24%. So another company where they're definitely fundamentals are driving price performance. Sometimes a stock is going to go up based on a story. It might be losing money. It may not have any sales. The stock price is going up. Anytime I look at a stock for inclusion in the Ultimate Growth Stocks model portfolio, it has to be profitable, has to have earnings history, has to show good bottom line and top line growth. Fundamentals are very, very important to me. I rarely fish in the super speculative pond. So Aruba Networks I would not include in that group. Excellent fundamentals, pretty good fund sponsorship, and technically acting well in this market. Another name I like here a lot in the retail space. Yeah, it's made a big price move, but look at how it's just moving sideways, holding on to its gains. Another company that was left for dead not that long ago, kind of fell out of touch with the consumer, but a nice turnaround going on at the Gap. We head into the final break here. Take a look at a weekly chart for the Gap, and you can see a big move this year, but firming up nicely, forming a flat base right at its 10-week moving average. This one looks pretty darn good as well. All right, folks, we'll check in on the market one more time when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Some other decent bases setting up in this market. Tractor Supply, another stock that could work here. It was recently trading around 99.08, sitting just underneath a swing point here of 101.28. So another stock that's forming a handle area in the cup with handle pattern. You can see last year, Tractor Supply did reset its base count. It consolidated gains for a period of time here, broke out, and then a lot of selling came into the stock where it undercut the low of the prior base. That serves to reset the base count, so you've got a first stage breakout here and a potential second stage breakout taking shape for TSCO. It may work, it may not work, but the point is have it on your watch list, set a price alert if it does take out that swing point in heavy volume. It would be a bullish development for sure. Another name I'm watching here, mentioned it on yesterday's show, but let's take another look here. Akamai Technologies, and it is forming a nice little base here, firming up at its 10-week moving average. Another possible breakout candidate here. So Akamai, another one to keep an eye on. Next week, pretty busy week of economic data. We've got the Fed minutes coming out on Wednesday. Of course, the last time the Federal Reserve met, they announced another round of quantitative easing. So we'll see the FOMC minutes on Wednesday. I mentioned Monday. The week is going to start off with the ISM Manufacturing Index for September. Would like to think we're going to see some good data there, but the manufacturing data have been consistently weak for several weeks in a row now. And Friday, of course, hard to believe another jobs report is upon us, but 1 week from today, the employment report for September will be out in August. I think the economy created, 96,000 jobs, I want to say. That was well below expectations of about 130,000. Unemployment rate right now at 8.1%, and certainly sluggish employment is front and center on the Fed's mind, as well as this weak manufacturing data. Next week, pretty quiet in terms of earnings. Let's check in on fertilizer maker Mosaic. It reports on Tuesday. It's looking like a bit of a laggard here. Not sure we're going to see huge numbers from this company. This is ticker MOS on the New York Stock Exchange. Only down 2 cents today to 57.63. Stuck underneath its 50-day moving average for now. And then a small cap company based here in California. This is a professional services firm called Resources Connection. Stock is under pressure today, down 2.6% to $13.11. They're going to be coming out with earnings on Tuesday as well. And then, another vulnerable stock here, Family Dollar Stores. Not real keen on the dollar retailers here. FDO has been coming back to life. It's working on 3 straight days of gains here. Up 1% today to 66.16 ahead of earnings next week on Wednesday. And then finally, Monsanto out with earnings next week as well, ticker MON. It's still holding gains nicely here, showing relative price strength in the market, holding above its 50-day moving average. Shares of Monsanto today down 31 cents to 91.05. So pretty quiet on the earnings front. Again, today is the end of the third quarter, so we're going to get a bunch of third quarter earnings reports that start rolling in the middle part of October. The latter portion of October seems like earnings season these days just kind of runs all together, doesn't it? Hope you have a great weekend, folks. Always my pleasure to speak with you about this market. Thanks very much for listening. As always, coming up next, the Tom O'Brien Show on TFNN for the next 2 hours. I'll be back Monday with another edition of Breakout Investing at 3 p.m. Eastern. Have a great one.